What's up, people? How you doing? First live stream I've ever done for a earnings release. Hopefully, it's not too echoey. I'll probably tell you to mute your conference call because then you won't be able to understand what's going on. I'll try to be quiet while they talk and then maybe speak in between important things. I don't know. We'll see how it goes. But very relieved with the Magnachip earnings. That's not me just talking like that as a bag holder. On first blush, you might think, oh, they just made top line. Maybe it was $1 million short, and guidance for next quarter is going to be a few $1 million light. What is there to like about this? Well, there's two things that I'm very pleased about. So the first thing is, as I said in my last YouTube, I was very concerned about the China lockdowns. And I thought that could have done significant damage to quarter two earnings. I mean, it could have been a $70-80 million number for next quarter. I had no idea what shutting down most of China, what kind of effect that would have on their business. So that in itself made me relieved. But the most interesting part about this earnings release is under the hood. Hi, Bobby Shea. Your first live YouTube. Don't you have an ambulance to chase, dude? Anyway, good to see you, Bobby. If anybody ever gets a slip or a fall or anything, Robert C. Shea, attorney at law, that's the guy to call. My man, Bobby. So what I was saying was the company has two divisions, right? They have the power division and they have the display division. As I've told you many times, I have no idea what each of these divisions does. Power powers things and display displays things is my understanding of it. I've done a kind of deep dive and spent a lot of time on this. And that's kind of my understanding. It's power powers, display displays. And the power business has been booming for the last 18 months, while the display business has been severely impaired due to supply issues. We all know this. What's amazing about this quarter's numbers is the power business made up for a gigantic shortfall in display again. So I did a little bit of work before the YouTube. You know me, always doing work for you guys. By the way, I'm already drinking. Cheers. This is a De Negoce number N255. The power business, starting in Q1 of 2020, did 50 million of revenue. Then it did 54 million in Q1 of 2021, 58 in Q4 of 2021, and it just did 65 million. I'm going to show you here. The display business in Q1 of 2020 did 70 million. It did 59 million in Q1 of 2021. So 70 million was Q1 of 2020. 59 million was 2021. 41 million was last quarter. And it only did 30 million of revenues this quarter. Fast on its way to zero. One thing to keep in mind is that Q1 is the seasonally softest quarter for Magnachip. Okay, it's the slowest quarter. What is my takeaways from this? Okay, well, either display is actually going to zero. All the supply stuff is not true. The business is being pulled by Samsung and they have no new customers and it's going away. Or, and I believe strongly that's not true, of course, or display is going to come back with a vengeance when the supply comes on board in the second half of this year and largely surpass that $70 million number it did in Q1 of 2020. Hold on, Punta. I'm busy right now. Who is dead right on this? I don't even know. I don't even know what David T. Oh, David T. Wasn't that huge asshole that was on here last time? Of course I'm not unblocking him. He could still be on here. He just can't talk, I don't think. I owe him a thong video. He's allowed to watch me. I don't think I'm allowed to block people from viewing the YouTube, unfortunately. I would have blocked Kid Dynamite. I'm just kidding. Me and Kid, we still strong. So what does this mean? So let's say display goes back to the 70 million it did. Oh, my fucking dog. All right. Come here. Let's go. Get outside. Let's say display goes back to the 70 million it did in Q1 of 2020, which is 2 years ago. Obviously, I think the business should be much stronger than what it did 2 years ago, given the very strong double-digit CAGR the industry's done and all the new customers they brought on, et cetera, et cetera. I think that 70 million is very low. Let's just go with the 70 million. Power, as you see, only goes up and to the right. It had some flat quarter-over-quarter numbers. I think Q3 and Q4 were flat last year. I think Q3 did 58 too. You see what it did in Q1, okay? And there's some capacity constraints there too, but they're bringing on more capacity there. Make sure they hold on one second. Okay. Better. No idea what the hell. Is that? Whoop. I don't know what I don't know what this line is right there in the middle there. It's like a rainbow. I don't know how to fix it. Oh well. You guys get what you pay for. I have no idea how to get rid of that thing. Is it the sun? Let's see if I pull down the shades a little bit. Hold on one second. Hi. Good to see everybody over there. Let's see if that worked. That did absolutely nothing. Anybody have any idea why I have a line going through my screen right now? Did I just like screw up my computer by trying to clean the... This is going to drive the living crap out of me. Oh yeah, it is that. Dude, what the... I'm so annoyed right now. Do this. There's no lamp. I don't have a lamp. All right, fuck it. Sorry about all that. I have no idea what's going on though, but I'm just gonna have to talk through it. I apologize. There's no overhead lamp. It's just my lights. I could turn my lights off, I guess, and see what happens. Let's see what happens. Turn my lights off. I did it. All right. I am so unprofessional. Sorry about all that. I think I'm still bright enough. That's good. All right. So as I was saying, if you assume they can get back the 70 million display, I have time to kill anyway. We have 20 minutes till the conference call starts. If we assume they can get the 70 million back in display and power keeps ramping from 65 up, that gets them to 135 million in Q1 revenue, which is the lowest quarter of the year. Okay. If you annualize that, and again, it's the lowest quarter of the year, you're basically at your 600 million revenue number, which is what the street's at for next year. In fact, I'm not even sure the street, what isn't the street at for next year? Let's see. I think it's 650. Pull it up. Yeah, the street's at 630 for next year. You get to whatever that is, 270, whatever it is, you get to 560 on a Q1 run rate just off of them getting back to the 2019 display number with power not growing at all. So it's my belief that's exactly where the management team is so secure in hitting that 30% growth of next year, because they know when the supply comes on board, their display revenue is going to surpass the previous 2019 numbers that they did. And your power business is still booming. So to me, under the hood, the numbers are even better than they seem, because OLED, which is display, is so negative and power is doing so well. You know, this whole, just to be clear, if the management team was not telling the truth, they've already given us a time frame for when the supply is coming on, which is the second half of this year. There'll be no excuse. Let's see if I can do a little bit of light. There'll be no excuse in the second half of this year if the numbers don't hit. And yes, Glenn says, I believe display has much better margin. It is, Glenn. It's a better business. So I believe so too. So, I don't know what the overall margins are going to go to once they ramp display. But to me, you have seen this will be the worst quarter we'll have in Magna chip short history going forward. Because when they report Q2, you're going to have a crazy good guide for Q3 because the supply is going to come on board, at least some of it at that point. But the truth is, guys, this company getting sold, right? I talked about this in my last YouTube about LX. I think I did a full YouTube on LX. And I don't think you would have had the kind of articles and the quotes from LX investor relations and media relations if they weren't very close to a deal. Now, when I say very close, I don't mean it's going to be sold next week, but they've done their due diligence. The company was being heavily shopped starting in the middle of February. It's now the May 8th, whatever it is, May 4th. So they probably spent 8 weeks doing their due diligence, and they're going to submit an LOI this week. You won't hear anything about that on the call, of course. And Glenn asked, does Q2 headwind delay sale? Unequivocally, no. My guess is that LX might have even known the numbers already at this point. You can't submit a letter of intent without seeing what the earnings that the books closed on April 30th. I mean March 30th, March 31st. And any company, especially one they're strategic, they have a semiconductor business, they know very quickly whether or not Magna Chip's telling the truth with its supply issues. So you could do due diligence on this, right? You call the companies that signed contracts with them, both from a supply side and also customer demand side, and you can see what the revenues are going to be in the second half of this year and next year. It's a pretty easy due diligence process if the manager is willing to give you the names of both the supply side and the customer side. And they would have to do that kind of due diligence before they would ever buy the company. So I'm not at all concerned about it being a delay. Someone asked me last time or on Twitter, maybe a company won't buy them now until they see the earnings ramp at the end of this year or next year. Well, it doesn't work like that. I mean, if they do put up $1.50 to $2 in earnings next year, they won't be for sale for $25 to $30 a share, right? And LX knows that. Anyone that's looking to buy them knows that. So you just have to get confidence that this is just transitory. And if you have that confidence, which I wouldn't be able to because I can't do the due diligence, I'm taking it on blind faith and also on what we know about the industry and specifically about those wafers. You can Google it. You can see it's all true that there is huge demand and short supply of those specific wafers that Magna Chip needs right now. And they weren't able to sign the supply contracts, the long-term supply contracts, while they were in the middle of the Wise Road transaction. I would think we would see a sale by the end of June, would be my guess. And I think this was the last hurdle you need to get through, which was earnings here, for that to happen. I sent a letter to the board and the CEO this week telling them that they should not sell for less than $25 a share. And I got to be honest with you guys. I think $25 is ridiculous, but I have, an 80% delta adjusted position in this name, 50% common and 30% delta adjusted in options. And that's after trimming it, last week or 2 weeks ago, whatever it was. So for me, I don't have a dispassionate view of what I think the stock's worth and whether I'm willing to hold on for full value. I'd be pretty freaking happy with 25, not a penny less, as long as that 25 had full certainty of closing. If it was a Korean buyer and no antitrust risk, and LX would have no antitrust risk. So for me, And I also own like a shitload of 2025 call spreads. So if it got above, as long as it closed at 25 by January of 2023, I'd be fine. Why do you think 152 is not just a one-off year as they work through demand supply issues? I don't understand what you mean, Punta. You think it's catch up? It's not catch up. So I proved it to you with the numbers. So they did 70 million in display back in Q1 of 2020, and display was growing regularly up until the supply issues in Q1 of 2021. And if you ask management about it, they changed all of their wafers to this new wafer. 90% of their business is now this new wafer that they can't get. And there's two sets of supply issues here. One is the near-term supply, which they've already fixed. And the next press release we're going to get at some point, he's going to talk about it on the call, I'm sure, and this is a very important thing to listen for, is they're planning on signing a long-term supply agreement to get them to the $1.5 billion of revenue range. And that's going to cost them money. It could cost them as much as $200 million in upfront purchase of take or pay contract for this supply. I talked about this after the management meeting. You can go find the old you could go find the old YouTube on it. And I think that's also a catalyst when they signed that deal, because people are worried they're going to spend $200 million on it. And it's my understanding from, I think I'll talk about it today on the call, hopefully, is hoping to only spend $100 million on it. And then the other $100 million will be spent by their customers. But this isn't an expense. This is a prepaid take or pay deal where that will become an asset, and then it will burn off as they take the supply over the coming years. So, I wouldn't look at it as their net cash is going down by 100 million. It's just turning into a different asset that, of course, can't be used to buy back stock or anything, but it's part of their balance sheet. So it'll be valued in a sale because it's prepaying future expenses. The big question you want to ask yourself is, how cyclical is this business, and what's the ultimate level it can get to? And all semiconductors are cyclical. The key here, I believe, is that there's so much secular demand. There's two things going on here. There's so much secular demand for OLED that it should grow at a double-digit CAGR for years to come. That's number one. But number two, Magnachip in specific, because of their company-specific supply issues, way beyond what the overall broader industry is doing, they should be able to hockey stick growth to get back to where their market share is and where their demand is for the products that they've already signed. So if there's a recession, the way to look at it is if they're having products that are going to be brought into cars, let's say next year for the first time. Well, obviously, even in a recession, if you weren't selling that product before, and all of a sudden you're going to get multi-million dollars worth of sales from this new product, the recession is irrelevant in that product, right? It's a brand new product line that you didn't have any revenue of them before. And then the second order of factor is the huge supply problems that they've had in all of their current business. So previously they've said they've had 50% more demand than supply. I'm guessing now it's way more than that, since this number was so bad this quarter on display. But we'll see what he says on the call. But you basically have so much to work with that if there's contraction, it'll barely show up in the numbers because there's so much growth to come from those multiple different avenues in the second half of this year and next year, which is why I'm so bullish on it. This China lockdown thing came out of nowhere. When I met with the management team March 12th or 15th, he almost completely dismissed it. And I'm sure they'll talk about it on the call today. But I guess you can eliminate that as one risk that we were worried about. First we were worried about Ukraine and Russia. Then we were worried about China locking down for COVID, and now both happened. Well, and obviously Ukraine and Russia we see is not having an effect on their business, either from a component perspective or demand. Of course, I think they less than $1 million of their business went to Ukraine and Russia. He told me, but people were worried that there were specific things in semiconductors, nickel or something that comes from zinc. I don't know, something comes from Russia, and We don't have to worry about that anymore. So I'm Origin Punto. What did David T? What was he dead right on? All I remember him was being a huge asshole. I'm curious. Neon, yeah. What exactly did he predict? The company just made revenues and beat earnings, and next quarter they sandbag everything, so that 1 to 105 will probably end up being 108, which will be what the street's at or whatever. I would love to know what David T did. Oh, that's not fair. He said trade 16 handle, and the fucking NASDAQ had the worst month since 2008. I always say that when I make predictions of price, it's completely isolated from a broader market. If 9/11 happens and the market goes down 10% in one day, of course, my stocks are going to get destroyed. So, these are like ARB fights about where break is on something. So yes, it went to $15. He's right. He was absolutely correct. It's true. I'm pretty sure he also wouldn't have thought the NASDAQ would be down 15% last month, or whatever the fuck it was, or 13%. So, and SMH down 20%. He didn't predict COVID locking down China. It was not after the NASDAQ rout. Absolutely not. He predicted that in the management conference call that I came on. It was a month ago. It was not a week ago. I blocked him a long time ago. There would be no context of him bashing it a week ago. I can assure you. But yeah, David T, I salute you. I salute you with your $15 price target. You're a hero. Hey, Matt, Fat Eddie here. Seems like a decent risk that YJ gets some fat comp incentive deal on new terms, assuming weak governance, so could be low price. No, I'm not too worried about that, Fat Eddie. He has a huge stake in the company. So he'll make a lot of money on the sale. The board does not have a big stake, so they don't care too much. But I want a deal to happen. Okay. So if you're telling me the big risk is that YJ and the board take a shit price because they want to have management get reloaded up with new incentives, after it gets taken out. All right. I'm so big in it that I just want a deal to happen. Now I can tell you that the odds of it happening below $25 is almost zero. I'm willing to ensure anybody out there that the odds of a $4 takeout is virtually zero, because there's just no reason for them to do it. Okay. I'm not going to go through the fucking math again, but a $29 deal in March of 2021 is worth like $34 today, $33 today. So for them to go from 33 or 34 to 25, and when they know they have all this stuff coming on board and they don't have to sell, there's no debt. They have $285 million in cash. They're not in pressure to sell by anybody. There's no activist out there. So I'm not worried about them being desperate, no matter what the Korean articles want you to say, because they're not desperate. And the biggest risk you have is that the two sides haggle over a few bucks. But if LX wants to pay 25 and Magnachip wants 29, is it really that fucking hard to meet at 27? I mean, it's not that much more money. It's like an extra $90 million, right? On a $1.3 billion sale or something. That's not what's going to break the deal, right? It would be that Magnachip is stubborn and wants 29 again. And I don't think that's likely. So if I had to guess, gun to head, deal gets done at $27. No less than $27. And possibly $29 or $30. But 27 would be the number that I would use. If I was doing Price is Right, as a lot of you know that follow me on Twitter, I'm a big Price is Right guy. I was going to do closest without going over. I would bid $27. I bid $26.99. Oh, well, I bid 27 if I'm willing, if you're going to pay me $500 in cash for getting it right on the nose. So should I take a second mortgage out tomorrow at $18? Well, Ravencroft, first of all, nothing on here is investment advice. And I would never give you investment advice. And you probably should never take a second mortgage out ever to invest in the stock market. And as I've said many times over the last few weeks, is that the macro environment is so bad that it's really hard to invest in stocks in general, let alone invest in pre-merger risk arb stuff. So if 6 months ago I was so confident Magnachip was going to get acquired after the deal break, I'm obviously much less confident today than I would have been in the fall or summer of last year. SMH has gone from like 310 to 240, 320 to 240 or something. So I know you're kidding. I'm okay. I could take a joke. The obviously very positive thing here is that this quarter was a big risk. It was a big risk. By the way, I'm not saying Magnachip won't go down tomorrow, though it's bid 1825 right now and no one sold a share. So I think it's really unlikely it goes down tomorrow. And if it goes down tomorrow, it won't go down more than, I don't think, 5% or 3% or something. But I was very worried that there was a chance this could go down. I'm going to get ready for the conference call. Hold on one second. I would mute your conference call and I'll just play it really loud. Okay, guys and girls. Do this financials conference call. Why am I, dude? I'm such a boomer. How do I even find this here? I'm so bad. Hold on a second, people. Just hold your horses. Hold on a second. I'm kidding. I'm just kidding, Justin. I didn't even read what you said. Let me just get in the conference call first. Events. Found it. All right, I'll mute it for now. Also putting on a more than 20% position is probably a terrible idea for most people. Yeah, he didn't ask me though, Glenn, how big his position should be. But yes, the position sizes I make are completely reckless. That I can give you investment advice for. And those, it's totally nuts. You shouldn't be putting up position sizes like I do. Even a 20% position is a huge position. People should have much more restrained, diversified portfolios and take no advice or model themselves after me in any way, shape, or form. You never know what other people's situations are. I have other assets. I own my home pretty much clear and free. My own personal assets are all in my portfolio, but there's family assets that are outside of that I don't count in that bucket of percentages. So everybody's individual circumstances should be taken into account when you look at position sizes. And that's why Twitter in general is such a cesspool, because you have people that do victory laps based on how much money they make. Then sometimes they tell you the dollar amount they make, or they just do a victory lap when they have a winning position. And there's no context to anything, right? So the whole schadenfreude of seeing people fail or seeing people succeed is so disgusting, because you just don't know what this person's financial situation is. So you do you figure out what your and by the way, any company could be a fraud. So if I wake up tomorrow and Magnachip's a fraud, yeah, I mean, I lose 50% of my portfolio in the common. The 30% delta adjusted as options, I lose like another 5%. There's tax write-offs to that. One day I'll go through all that with you guys. I'll do a whole YouTube on how I look at position sizing. It's a good idea. I've done it on Twitter before, but I take position sizing. I think I take a somewhat sophisticated view with it. I mean, for me, I look at it all after tax. So, if I make 500 basis points, I'm only making 250 basis points. If I lose 500 basis points, I'm only losing 250 basis points, because I'm in California and my tax rate's over 50%. So that only works as long as you have money to play with. If your money all goes to zero and you're left with this big NOL from all your losses, you can't make the money back to use that NOL. So it's important for that context. But that's one of the reasons why I think my position is so big, is because I look at everything after tax. Is being recorded. All right, it's starting. If you require any assistance during the call, please press *0. I would now like to hand the conference over to your speaker today, Ms. So-Young Jung. Ms. Jung, the floor is yours. Can you guys hear okay?
Operator. Thank you everyone for joining us to discuss Magnachip's financial results for the first quarter ended March 31st, 2022. The first quarter earnings release that was filed today after the stock market closed can be found on our investor relations website. A telephone replay of today's call will be available shortly after the completion of the call, and the webcast will be archived on our website for 1 year. Access information is provided in the earnings press release.
Jeremy and Justin and Kevin, I'll answer all those questions after the call is over.
Chief Executive Officer, and Shin-Young Park, our Chief Financial Officer. YJ will discuss the company's recent operating performance and business overview, and Shin-Young will review financial results for the quarter and provide guidance for the second quarter of 2022. There will be a Q&A session following the prepared remarks. During the course of this conference call, we may make forward-looking statements about Magnachip's business outlook and expectations. Our forward-looking statements and all other statements that are not historical facts reflect our beliefs and predictions as of today, and therefore are subject to risks and uncertainties as described in the safe harbor statement found in our SEC filings. During the call, we also will discuss non-GAAP financial measures. The non-GAAP measures are not prepared in accordance with generally accepted accounting principles, but are intended to illustrate an alternative measure of Magnachip's operating performance that may be useful. A reconciliation of non-GAAP financial measures to the most directly comparable GAAP measures can be found in our first quarter earnings release, available on our website under the Investors section at www.magnachip.com. I now will turn the call over to YJ Kim. YJ?
Hello, everyone, and thank you for joining our call today. To begin, I'd like to quickly touch on our Q1 consolidated results and then give an update on some challenges we are seeing in the broader macro environment. After that, I will provide a detailed review of our business segments. In Q1, we reported revenue of $104.1 million in a severely supply-constrained environment. This, along with strong gross profit margin, generated a non-GAAP EPS of 28 cents, which was an increase of 27% year-over-year. While it is good to see the healthy bottom line bolstered by improved gross margin, I am still disappointed with these results because it doesn't represent the full potential of this company. As we approach the end of Q1, we are optimistic that we would begin to see incremental improvements in business conditions for the rest of the year. However, the ongoing lockdowns in China have added new challenges to an already stressed supply chain to both of our businesses. We want to take a cautious stance for the near term despite recent positive momentum, which I will go over in detail. Moving on to a detailed review of our Q1 results by product segment, starting with OLED. Our OLED revenue in Q1 was $26.1 million, down 30.7% sequentially and down 53.1% year-over-year. As expected, severe shortages in 28nm 12-inch wafer capacity, where we produce most of our new OLED products, continue to significantly impact our results. However, we remain focused on supporting our existing customers, winning new business, or additional capacity plans to set ourselves up for a strong recovery. First, our dedicated customer support and engineering teams are working closely with the top-tier panel maker in Korea to initiate and support 2 OLED driver IC projects, which we expect to kick off this month. Second, as mentioned last quarter, we successfully broadened our customer base to include a top-tier panel maker outside Korea. In Q1, we worked very closely with this customer and successfully taped out the first project in February. This product is expected to greatly contribute to our revenue in the later part of this year. Further, we have engaged in designing discussions for additional new projects with this customer. Third, our additional 28 nanometer manufacturing capacity remains on track to come online in the later part of this year. While we expect to go through a typical learning curve during the initial phase of production ramp, we expect yields to improve over 2023. In addition, we are in active discussions with our foundry partners regarding a multi-year supply agreement to secure long-term capacity and expect to have an update for you in a couple of months. Finally, in terms of our new business areas, we successfully ramped mass production of our new OLED TV drive IC product line during the quarter and saw strong revenue growth for the large display OLED TV market. While still small, we are optimistic about the growth potential for this business. For OLED automotive display applications, we added an additional customer design win during the quarter with a premium European automaker for their center stack display, and the initial mass production is scheduled for the first half of 2023 based on our customer's current plan. In summary, our OLED business is winning new customers and expanding into new applications. With additional supply capacity expected to ramp up in the later part of this year and progress with our LTA supply agreements, we are very optimistic about the growth in our OLED business in the future, particularly when our newly designed products at the leading Korean customer and new major customer outside of Korea are expected to go into full production with our newly added capacity. For Q2, we anticipate our OLED business revenue to be flat to slightly up, primarily as the capacity level remains about the same. Now let's turn to the power business. I'm excited to report that we achieved the highest revenue in company history in a single quarter, primarily driven by strong demand for our premium power products as well as battery FETs products. Our power business revenue in Q1 was $64.8 million, up 11.4% sequentially and 20% year over year. These results were driven by very strong demand for our premium products, particularly our super junction MOSFET, Power IC, and IGBT product lines, which grew 19.5% sequentially and 25.1% year over year to a record high 53.6% revenue mix. In addition, battery FETs that support world's leading foldable smartphone, earphones, and tablets demonstrated strong growth. We are extremely excited about the continued momentum and growth in our power business in key end markets like communication, consumer, industrial, and computing, all driven by the trend in electrification of everything. In our super junction MOSFET product line, we are seeing robust demand from TV, PC power, and lighting applications due to increasing energy efficiency requirements. In Q1, we had strong traction with new designs in TVs and LED lighting, as well as share gains in laptops and gaming. For Power IC, we began ramping shipment of our boost ICs for solid-state disk for servers and data centers. In our IGBT product line, revenue grew about 60% year over year, driven by our entry into renewable energy end market, particularly solar inverter applications. Our go-to-market strategy, efficient R&D, and timely investment in Fab 3 led to us to achieve record quarterly revenue once again, and also accelerated development and introduction of new products. One notable achievement for the quarter was that we successfully expanded the automotive design pipeline with our new high-performance medium voltage MOSFET product for brushless direct current motor applications. We We received a purchase order for our new 40-volt MV MOSFET from a Tier 1 automotive supplier for major car manufacturers and started mass production in April. We also kicked off more MV products for multiple automotive applications. This is an additional win aside from the original automotive power project that we announced previously. Our original automotive power project is progressing well. The qualification and design activities are moving along with the end customer schedule. We expect the initial mass production to start in the second half of 2023 based on our customer's current plan. During the quarter, we also added another new product to our power supply family with the announcement of high-performance synchronous boost converter that can be used in a variety of applications for SSDs, OLED panels, and Bluetooth speakers. This boost converter provides strong circuit protection capabilities and allows for smaller PCB board form factors in environmentally friendly packages. In summary, we'll continue to execute the growth plan of our power business by strengthening factory productivity and introducing new products with superior performance and improved cost, which we expect will further drive healthy growth for many years. For Q2, we expect our power business revenue to be flat to slightly down as a result of back-end capacity constraints due to the China lockdown. In conclusion, we are expanding our customer base, penetrating new applications, and remain focused on executing our long-term strategy. Despite macro issues and increased uncertainty, which may limit our near-term opportunity, recent developments and critical milestones we have achieved reinforce our confidence and optimism about our long-term growth. Now, I will turn the call over to Shinyoung and come back for the Q&A. Shinyoung?
Thank you, YJ, and welcome to everyone on the call. Let's start with key financial metrics for Q1. Total revenue in Q1 was $104.1 million, down 5.7% sequentially and down 15.4% year over year. Revenue from the standard product business was $94 million, down 5.5% from Q3 and down 16.7% from the same quarter a year ago. Once again, both the sequential and year-over-year decrease was due mainly to a significant decrease in revenue in our display and OLED business driven by the previously mentioned supply shortage. However, our power revenue in Q1 was very strong and achieved a record revenue of $64.8 million, which represented an increase of 11.4% sequentially and 20% year over year. The significant growth was due to strong demand across most product families, particularly our premium products. Gross profit margin in Q1 was 37.5%, up 250 basis points from Q4 and up over 960 basis points from Q1 a year ago. Year-over-year increase was primarily attributable to an improved product mix combined with an increase in average selling price under a favorable pricing environment. Sequentially, Q1 benefited by approximately 200 basis points from a timing mismatch of lower cost 12-inch wafers that was purchased in a prior period and sold in Q1. Turning now to operating expenses. Q1 SG&A was $14.2 million as compared to $13.3 million in Q4 2021 and $12.6 million in Q1 last year. Q1 R&D was $12 million as compared to $12.2 million in Q4 2021 and $13.4 million in Q1 last year. Stock compensation charges, including operating expenses, were $1.6 million in Q1 and the same $1.6 million in Q4 and Q1 2021. In Q1, our operating income was $12.9 million compared to $63.9 million in Q4 last year and an operating loss of $2.1 million in Q1 2021. As a reminder, Our Q4 2021 results included net gain of $49.4 million that represented income of $70.2 million from the recognition of a reverse termination fee, net of professional service fees and expenses incurred in connection with the contemplated merger transaction of the company that was terminated in December 2021. Of the $70.2 million, we received $51 million in cash in December 2021, and $19.2 million was recorded as other receivables on our balance sheet as of March 31, 2022. Subsequently, in April 2022, we received $14.4 million, and the remaining $4.8 million is expected to be received by the end of June 2022. Adjusted operating income in Q1 was $14.5 million, about flat from $14.4 million in Q4 2021, and up from $10 million in Q1 a year ago. Adjusted EBITDA in Q1 was $18.8 million, slightly up from $18.1 million in Q4 last year, and up from $13.5 million in Q1 a year ago. Net income in Q1 was $9.5 million as compared with $53.6 million in Q4 2021, and a net loss of $7.5 million in Q1 a year ago. The sharp sequential decrease was due primarily to the recognition of income in Q4 2021 from the $70.2 million reverse termination fee discussed earlier. Our GAAP diluted earnings per share in Q1 was 20 cents, as compared with $1.12 in Q4 last year and loss of 19 cents in Q1 a year ago. Our non-GAAP diluted earnings per share in Q1 was 28 cents, down from 31 cents in Q4 last year, but up from 22 cents in Q1 last year. There were 46.7 million shares outstanding in Q1, calculated on a diluted weighted average basis. On December 21, 2021, our board authorized the repurchase of up to $75 million of the company's stock, and as an immediate step, we entered into a $37.5 million accelerated stock repurchase agreement with JP Morgan Chase Bank National Association. On March 14, 2022, we completed the ASR program. It repurchased approximately 2 million shares at an average price of $18.51. Now moving to the balance sheet. Cash was $284.9 million at the end of Q1. This compares to $279.5 million at the end of Q4 of 2021 and $290.2 million in Q1 of 2021. Accounts receivables net totaled $51 million, about flat from Q4 last year. Our days sales outstanding for Q1 was 44 days. Inventories net totaled $36.9 million, a decrease of 6% from Q4 last year. Our average days inventory for Q1 was 51 days. CapEx was $0.9 million in Q1. As disclosed in our previous earnings call, this year we'll invest about $8 million of special CapEx to further improve factory capacity. Excluding the special CapEx, our normalized CapEx for 2022 is expected to be at approximately $20 million. Now moving to the second quarter guidance. Our near-term outlook is still being challenged by persisting supply constraints, especially for 28-nanometer 12-inch wafers. While actual results may vary, looking into the next quarter, management currently expects revenue to be in the range of $100 million to $105 million, including about $9.5 million of transitional factory foundry services, and gross profit margin to be in the range of 33% to 35%. With that, I'll turn the call over to Soyeon. Soyeon?
Thank you. Thank you, YJ and Shinyoung. So, operator, this concludes our prepared remarks, and we'll now open the call for questions.
Thank you. As a reminder, to ask a question, you'll need to press *1 on your telephone. To withdraw your question, please press the pound key. Stand by as we compile the Q&A roster. Our first question comes from Suji De Silva of Roth Capital. The line is open.
Hi, YJ. Hi, Shin-Young. Let me start off with some of the recent press about potential OLED driver industry consolidation. I just want to get a sense from your perspective, if you can update on Magnachip's strategic review process, where that might be, post the Wise Road bid that was terminated. Susie, nice talking to you. We unfortunately comment on rumor or the rumor or deals and future deals. So let me put it that way.
Sure. And I was trying to understand if you had a process in place that you already articulated, and if that was how that was progressing.
I don't think we have made any other announcement after the Wise Road. So yeah.
Okay. Great. Thanks. Switching over to the OLED business, I want to understand why
Susie, but I can say that, look, we are focusing on the MX 3.0 strategy as well as the board management committee to protect and enhance our long-term shareholder value. So let me put it that way.
Okay, do appreciate that, YJ. Okay, so switching over to the OLED business, obviously understanding the supply constraint here, but if we talk about the potential for the new non-Korean customers, should we be conservative on that one, or can the win base there potentially have that revenue run rate move toward a size similar to your existing customers? Any thoughts on how that could shape up for you would be helpful at the intermediate term.
So first of all, let me say that we are having a very key positive momentum. First, with our existing customer, and so we have dedicated support team and engineering team. And as I mentioned today, with the top tier Korean maker, we are starting 2 new projects. We will kick off this month. And additionally, on your question on the outside Korea customer, we actually successfully taped out the new product. And so we expect to go production towards the later part of the year. So we see a great future with these 2 customers. So in addition to that, we are also producing already the TV products for other Korean makers. So we are diversifying customers and we are diversifying our product portfolio. So we expect to grow with that kind of momentum.
That's very helpful. And then on the gross margin side, the product gross margin, I believe, top 40% for the first time. I know there was some one-time elements, but can you clarify what you meant when you said there was a favorable pricing environment this quarter?
I mean that this quarter particularly see that 200 basis points represent a one-time timing benefit that we enjoyed this quarter at because we lower cost 12-inch wafers that we purchased in a prior period, but we actually sold at a higher price in Q1 2022. So this is actually similar to what happened in Q3 of last year. So our pricing strategy is to pass this type of increased cost to our customers, but this may not happen all the time, or the time may not be aligned all the time. So that's one-time benefit that we actually had in this quarter.
I understand, Shin-Young. So the pricing comment was related to the one-time comment. And then just to look ahead, I think even if I adjust for the 200 bips, the guidance is for a slight gross margin decline. Can you talk about the dynamics here, the gross margin quarter to quarter?
So the gross margin, can vary by quarter, and definitely product mix has an impact on it. Q1 definitely has product mix. The Q2, looking into all those pricing and the product mix and the manufacturing cost variables and all that, we considered everything. And now based on the information we are having the Q2, that's the guidance that we are actually estimating the gross margin in Q2.
Okay. And then lastly, YJ, I know capacity is obviously one of the big factors here. Can you talk about the potential for these LTAs, long-term agreements, and what supply agreements, and how much capacity there's the potential to secure? Obviously, everybody's fighting for the same capacity. So if you could walk us through some of the opportunity and strategy there, that would be helpful to understand as you're approaching these discussions.
Sure. So we do have an MOU with currently with multiple foundry makers that are 12-inch and the 28 nanometer. we are in the midst of transitioning into the actual LTA for the long term. And so we will update the market in the next few months, as I said today. And we also have the new 28 nanometer foundry coming from New Foundry towards the later part of the year that will give additional 28 nanometer capacity. So we are pretty excited about the going into production when these new products for the Korean customer as well as outside Korean customer go into full production when the additional capacity comes online starting later part of the year.
Okay, that sounds a source of optimism. Thanks Shin-Young. Thanks, YJ, for the color.
Thank you.
Thank you. Our next question comes from Raji Gill of Needham & Company. Your line is open.
Yes, thank you for taking my questions. So just YJ, I think the last quarter, remind me again, you had mentioned, a pretty significant ramp in Q4 to hit some of your growth targets. I wonder if you could kind of update us there, if you still expect that to happen. In Q1. So any update there in terms of anticipated ramp in Q4 as you get more capacity for 28 nanometer OLED?
Yeah, so thank you for asking. So the things are changing rapidly, right? Since the late March, you had the Shenzhen lockdown. Now you have a Shanghai lockdown that's about 5-6 weeks. And the Ukrainian war, so that is creating some uncertainties globally, as well as some China market, as well as especially affecting the supply chain. As you know, we have a back end for the power, as well as potential 12-inch foundry in there. So that is creating some uncertainties as well as limiting our visibility. So, it's creating very hard to pinpoint out how the rest of the year will pan out. And so we are now back to guiding one quarter at a time. And once we get the better visibility, we'll provide more colors. But in terms of talking more long term, despite these macro issues, on the OLED side, we are winning new customers and expanding into new applications. So we are very optimistic about the growth on the OLED business. And once these new projects, whether it's a Korea new customer projects or the outside Korea, when we go production, we're going to ramp up with the new capacity that I just mentioned to Susie. And in terms of power, we continue to execute our power plan through the Fab 3 productivity as well as external foundry. And we are rolling out new generation products as we speak. And so we are very optimistic about the growth. So let me put it that way.
Got it. Yeah, I appreciate the low volatility around the macro. But just any sense, do you think, you'll still be able to grow this year overall revenue, in light of these kind of macro concerns, but also on the flip side, the anticipated ramp with your new 28 nanometer capacity?
So as I said, it's very hard to pinpoint for the rest of the year how it will pan out. But I can say that once we have the new foundry capacity with new product goes into production, that's going to ramp. So, once we have better visibility, we will guide you more and give you better colors.
Got it. Okay. And then, on the gross margin side, you mentioned that you're kind of incurring some of the costs associated with the 28 nanometer, and that the yields are suboptimal, but they'll start to improve in 2023 as you get the volume. So should we be, how do we think about the margins kind of throughout the year? Are we expecting that you're going to be covering some of that fixed cost, or still as you ramp 20 nanometer and the yields are low, that the margin should be kind of within this range, or are there other drivers that can maybe bring it down?
Yeah, so, again, we are guiding one quarter at a time, but, I think we already factored in the yield assumption curve.
Mm-hmm.
So I think, I think conservatively is what you should look at initially, but we should be able to go up the yield curve, especially towards next year.
Yeah, appreciate it. Thank you.
Yeah.
Thank you. Again, to ask a question, please press star 1 on your telephone. Our next question comes from Martin Yang of Oppenheimer. Your line is open. Pardon me, Mr. Yang, if your phone is on mute, please unmute your line.
Thanks for the reminder. I was on mute. Thank you for taking my question. So my first question is about the display segment trajectory, revenue trajectory in the second quarter. Can you maybe provide us with more details regarding either pricing or volume expectations for display?
Yeah, so you marked earlier today that we expect the OLED to be flat to up this second quarter. Again, it's limited by the supply constraints. So that's what I can comment.
Got it. My next question is about your potential opportunities for medium to large size OLED display, particularly for IT and automotive applications. I think you highlighted auto, but where are you positioned for potential adoption for notebooks, monitors in the longer term?
So Martin, that's a very good question. So in the auto, we now have 3 design wins, and we said that some of the product will go production starting the first half of 23 to the 3 end customer European automakers. On the IT side, we do see some trend going into the IT. There we have opportunity, not only the OLED driver IC, but also our PMIC. So we are working on that. So once we have a production schedule that we can pinpoint, then we will also share with you.
Thank you. My final question is on your design with your non-Korean panel maker customers. Assuming everything goes to a satisfactory yield, will those products shipping by the end of the year or early next year, will they have similar gross margins to pre-pandemic products? How does the gross margin profiles compare for that customer versus other customers?
Yeah, so we expect, based on the current forecast, that we will go production by later part of this year. The foundry will go through a yield learning curve on the 28 nanometer OLED process. So we've been a little cautious, but I think we will can update in a near future. So then we can give you more clear guidance on the margin. But I mean, we look February going into next year. But we will have more to pinpoint outlook in the near future.
Thank you, YJ.
Thank you. And speaker, I see no further questions in the queue. I will turn it back over to you for closing remarks.
Thank you. This concludes our first quarter 2022 earnings.
All right. What to take? So I obviously didn't like that they're not reiterating the full year will grow over last year. I don't think, in his defense, I don't know how we could have any visibility into Q3 or Q4 when he had no visibility into Q2 after what happened with China. And I look at it all as extremely insignificant. Like I said, the two major drivers here, the only two things that matter is the short-term supply still coming on board for the second half of this year? And the answer is yes. There's no reason why that would have changed. And the second thing is there demand that's still there? And is demand changed at all materially from last quarter, whether it's new product lines or existing product lines? And your only takeaway from this call is that no, the demand is strongly there. He said nothing about the macro environment. You heard nothing about recession or customers being cautious or anything like that. This is not the kind of company where you hear that from because of the significant supply constraints. And then, of course, the second half of the supply side is the long-term supply agreement, which they're going to sign in the next couple months, he said. The way I look at it is they're deep in a sales process. He's not just talking to shareholders. He's talking to buyers of the company. This company was sold once. It shouldn't be a New York Stock Exchange listed company, a Korean company in no indexes with no shareholder base in Korea. This orphan stock shouldn't exist. And they know this, and they don't want to be beholden to US shareholders. So we dodged a bomb. Like I said, I don't, the stock's up a little bit in after hours. I have no idea what it's going to do tomorrow. I don't care really. I just didn't want the earnings to be a complete debacle. And I'm very relieved that Q2 wasn't worse than it is. I'm very happy that the power business is booming as much as it is, because I look at the OLED side, display side, as impaired temporarily. And time will be proven right whether we've been bullshitted or not. I mean, Q3 should perform well, and Q4 should be fantastic. And if it's not, then we were wrong. I would think that the company sold well before then. I was more hesitant at that happening until these articles came out about LX, because it's very hard to know how they could find a specific buyer for this. But I'm obviously more optimistic now. There are some questions I wanted to answer from earlier on. I'm going to go in reverse order. So if anyone wanted to know how well capitalized LX is, I did a little research on that. LX is its parent company, and it's a very complicated answer your question. So, LX came from a massive conglomerate that's extremely well capitalized, and it got spun off last year, and they have themselves. LX has 4 or 5 subsidiaries, including a semiconductor company, and I wouldn't say this is an easy deal for LX International to swallow. You can see what the publicly traded value of the company is. It's less than Magnachip, but the semiconductor company is worth like 150 to 200% more than Magnachip at a $27 takeout price. I look at everything at the takeout price, not at where it's currently trading. So through all the different layers, they have the resources to acquire Magnachip with no problem. But it's not a rounding error. This isn't like Shell buying, SHLX, right? It'll take work and effort, and they'll really have to make sure this is the right move. So this is a big acquisition if they do this. And that's what the articles say, right? That this is not some small little bite that they're taking. Is it clearly in MX best interest to keep stock price high so there is a premium on top of whatever price at the time of announcement? These things can't really be gamed. You obviously want the stock price to be higher than lower, but LX and its bankers are going to say that the 1865 stock right now isn't even the right stock price, that the stock was 1525 before Korea articles came out saying that LX was going to buy them. It's called the unaffected price. So, of course, it was also impaired for a million other reasons. The China lockdown, the NASDAQ plummeting, SMH plummeting, whatever. So both bankers try to use these unaffected prices as the threshold for negotiations. And that's what these articles try to say, right? Like there's no way they would sell for $29 or $27 because it's trading at 15. It doesn't matter as much in this scenario because we've already had an entire process with tons of bidders, and we saw where the auction came out at. And you can use SMH as a comp from where it was before, where it is now. SMH is at the same levels it was at when the last process happened. You can use all the things I've done to try to estimate what 29 today is versus 29 back in March. Again, done a million times, but the buyback with a year forward in earnings, also you have the breakup fee and they all, at this point, I can assure you the bankers know where the bid and ask is here. And they know that Magnachip wants $29 or $30 a share, right? They came in with that. And the bids probably were all in the low 20s. They, 25, 30% above where it was trading. And Magnachip said no, is my guess. And it's not hard to guess that. It makes sense that that's what would happen. So I think that the bigger question is whether or not LX can afford it, whether other companies can afford it. And I wouldn't own this if I didn't think that Magnachip was worth the 25, 26, 27, 28, 29 a share, okay? There's a million things out there you could buy in M&A. Zendesk is a good example. I don't know if Zendesk is worth $150 a share, or $125 a share. And that's why I have call spreads on it. I sold my common in that, by the way. So I don't own any common anymore in Zendesk. It's just call spreads. But that me is playing a game of merger arb. I'm just being speculative based on articles and takeout multiples and SaaS companies and whatever. But that's not a value investment. With this, it's very easy to back into a $27 a share stock price. I mean, I could do it for you right now. By the time this deal closes, your net cash, your net assets will be $8 a share, something like that. So 27 turns into 19, and that $19 stub, should make $1.50 to $2 in earnings, and you can lever it up somewhat. So you're talking about an EV, EV cash flow yield of almost 10%. And a levered equity cash flow yield, if you lever up to do the deal, let's say you borrow like 500 million or 350 million or something, you're probably getting to a 12, 13% equity free cash flow yield. And that's at a $27 stock price, right? I'm buying it at $18. And of course, because there's so much cash and net assets, if you look out a year, that my free cash flow yield on enterprise value is 15% now, or whatever, at least, maybe more like 20%, kind of $1.50 to $2 earnings on a $9, $8 stock price, 20+%. So my conviction is that it's a very cheap value stock, and I've just happened into this, owning this Korean semiconductor that I'm hoping gets sold in the next few months. I'll be honest, and this is also like 101 in investing. If someone pitched me this today, would I be interested in this? At an elevated margin and not knowing really anything about the core business and no real confidence that a sale is definitely going to happen. No, I don't even know if I'd make this a 5% position. So I don't think it intellectually is honest telling you that, because I have years of experience with this, and now I know the stock, it's like to my core. So it's not me coming about it new, right? It's not about would I buy this today not knowing anything. It would be would I buy this today knowing everything. And yes, knowing all I know, I could sell the stock right now if I wanted to. So tomorrow, whatever. But there's no, I'm not anchored to anything. I think that we all suffer from psychological anchors, psychological intellectual faults of being stuck with an old position and wanting to have it work. But I have no problem selling positions out that don't work. I sold Groupon out. So it isn't that. I think that your value's there, you have a motivated seller, and you have multiple catalysts into the end of this year and to next year in the core business. We've waited a long time to see earnings ramp. Earnings will ramp. And I don't see, if the stock was like $23 right now, it's a different issue, but at $18, I don't see what legs it down outside of, the market going down again another 20% or something. Because I'm not worried about China lockdown anymore. So I don't see Q3 printing or Q2 printing with Q3 guidance and disappointing. My guess is the street takes down numbers in Q3 and Q4, but I'll remind you, when I did the last YouTube, the numbers are all batshit crazy, Q3 and Q4. They weren't very strong in the first place. So I guess they could take down numbers. Power business is booming, and we have no idea what the display side is going to do. But it won't. I don't know what that's going to do to the stock, and I'm not too worried about it. So that's where I'm at with that, Fat Eddie. Someone else asked questions though. Let's see here. Someone asked, the decrease was mainly due to a 29.3% decline in display, partially offset by, yeah. I talked about that, Kevin. It was offset by the power business booming. There's only 2 divisions, so you can go back and re-listen to the conference call. And Justin said, yes, Kevin, what products use OLED wafers? See if those items are out of stock online. I don't know. That's probably too much work. But you can, if you wanted to, Google the specific wafer they're saying that they can't get, and you'll see that there's massive constraints in those wafers. It would be like pretty diabolical for them to be lying completely about why the business is impaired. Companies do it all the time, but they'll be shown as fools, especially because they already told us they have supply coming online, right? The red flag would be, we're just sitting around waiting for this supply to come online. We don't know when it's going to come. It might come 5 years from now, but they're told us the supply is coming online in the second half of this year, and we'll get more visibility into future supply for to get past that $600 million of revenue in the next couple months. So I'm just not concerned about it. Jeremy, say a deal is reached with a Korean buyer. Could China block the deal, retaliate for the U.S. blocking the Wise Road deal? So, Jeremy, that's always been the biggest issue, is that China would retaliate. But China would retaliate. If China was going to retaliate, they would retaliate with a U.S. buyer. So that would be the tit for tat, right? A U.S. private equity firm buys Magnachip, and China says, nope. Of course, that's ridiculous because it's New York Stock Exchange listed and all U.S. people own it. This is the reason why U.S. Private equity buyers are not part of this process. And I said this back in the fall. I said it's very unlikely U.S. would be able to buy them. So I'm not changing my tune at all. There is no risk at all that South Korea semi can't sell to a South Korean financial buyer or can't sell to a South Korean conglomerate, assuming there's no actual antitrust risk. This is a small company. This is not NXPI being bought by Qualcomm. This is a small little company. So China is allied with South Korea, and China's not going to stop a South Korean to South Korean transaction. It's just not possible. At that point, you're basically just saying that, literally no one in the world can buy this $800 million piece of shit semiconductor company. Like this isn't Theranos. They're not in control of some sort of proprietary technology that the world is dying for that only they can make. That's a joke, obviously. So I'm not worried about that. And I think that the most work that the company's doing and the bankers is making sure the buyer can buy this with no problem. And LX is a perfect buyer. They have no overlap with the current semi business that they own. So there's no antitrust risk. And it's just South Korea to South Korea. So there's no risk from a jobs perspective. And China, of course, can't say that there's a problem with a South Korean company being sold to a South Korean company. So no, they're not going to retaliate and block it. All that would create is, a trade war, much worse than we already have. It's a small little company. This is not, usually China and the US do things with 20, 30, $40 billion businesses. And in fact, that's why the US did this, because it was so irrelevant. It was a way to kind of fuck with China without actually creating any problems, except it screwed over us. But it wasn't a big enough deal to matter to anyone outside of Magnachip shareholders, right? Just a small little deal. So I'm not worried about that. I think that's it, right, guys and gals? Are we done? Wow, hour and 20 minutes. Oh, there's more. Let's see here. Does the poison pill come back into play? Now, the poison pill is totally irrelevant. That won't stop any purchase from happening. It never does. All that would stop is some activists coming in and buying, 15% of the company. But they just did that because that's kind of a check the box thing after they had a failed sale. You don't have to worry about that at all. They're sellers. The company wants to sell the company. The board wants to sell the company. We know they do. They tried to sell it once before. They're not our enemy. I think that they very much are aligned with shareholders and want to do what's right for shareholders, because the CEO is, the largest individual shareholder there is in the company. So I can't imagine anything that happens that doesn't make us align with them. Not reader guidance seems like a red flag to me, don't you think? Well, Punta, I explained it. What my issues are with that. It seems like there would be there's only 3 quarters left, right? And they're guiding Q2. So all there is Q3 and Q4. And after what just happened with China and the lockdown, I don't know how it would help him at all. He didn't not reiterate the guidance. He said we're guiding 1 quarter at a time, and he explained what the factors are in for Q3 and Q4. So directionally, everything's going to go fine, right? I guess for him, it's better that the street stay conservative, which he thought he was doing before this quarter. And after these China lockdowns, he has no idea what Q3 and Q4 can hold. So, like I said, I would have liked him to say we still think we'll grow in 2022 over 2021. But nowhere did they pull, for instance, their MX 3.0, strategy. They didn't say that the 2023 guidance is not intact. He was just talking about this year's numbers. So none of that to me is terribly concerning. I was really worried about a big kind of black swan thing with the China lockdown. And again, I don't know what the stock's going to do in the short term. It's not down obviously now in after hours, but nothing about this call or anything about it will make me want to sell stock in the 18s. I don't want to buy anymore. I have an 80% delta as a position, but there's an 1825 bid right now. I could hit that if I want to do. And I also, like I said, not also rushing out to buy more stock, but I wouldn't buy more stock pretty much at any price at this point, given the size I am. I was so big in the 15s, and I used the pop to take some off. I mean, I was over 100% delta adjusted when it got to 18 on the articles. So I'm good. I'm all set with Magnachip. Let's see what happens. I hope it gets sold by the June UpX, because I have some option positions there, but most of my options are in September and January. And we'll see what happens. I don't see the next quarterly call being negative in any way, right? I see it all positive. Supply is coming on board, demand's here, and a really solid guide for quarter 3. Much higher quarter over quarter. If they haven't sold the company, the stock goes up, just in the fact that we're finally in that news flow where they're going to start growing quarter over quarter every quarter through 2023. That was why I was so bullish last time, back in January or February, whatever, that I saw the path towards only good news, and then the COVID lockdown hit, right? I thought this quarter would be great too. I thought this quarter would be great because I thought they sandbagged and then they'd have a great quarter two guidance. And the COVID lockdowns fucked it. I mean, there's no way they didn't fuck it. They didn't tell us the magnitude of the revenue fall from COVID and from China. I would like to know that, but I'm sure it was significant. Most bullish thing I heard was when he tried to give an answer and then was told he couldn't answer the question by someone. Oh, interesting, Jake. I didn't hear that. I'll have to re-listen. Was that, Jake, was that during when he asked, was that when he asked about, are you in a process? Oh my God, Punta. I have a small call spread position, but don't love it. Any thoughts on anti-fan merger spread? You're giving me all this shit and you have like a 10 basis point call spread position in this? Jesus Christ, go watch porn or something, man. I appreciate it. Look, I like all pushback as long as it actually is helpful pushback. I thought the last guy wasn't helpful pushback. Your comments are whatever. Your last comment was not radar guidance was a red flag. No, don't you think? I don't know if you weren't paying any attention, but I literally said that on this YouTube that I didn't like hearing that, and I explained why. So it's that, you know, that was the only part of the call that I didn't love. Why would I love that? A friend of mine, ATVI is his biggest position. I have no position in ATVI. I generally don't do merger deals like that. Generally, I have absolutely no idea if they're going to approve the merger. I would think it's very likely they approve the merger. If they do, then you make a great spread. If they don't, I hope the stock's worth more than what it's trading at. Warren Buffett obviously thinks that it is. So you probably could do a lot worse than the ATVI merger spread. A lot of worse ways to park your money. And that's what Warren Buffett came to the conclusion of. Why didn't LX just come in to bid 25 last round? I have the answer to that, actually, Punta and David T. Thank you. It's a great question, David T. LX did not exist the last round, David T. and Punta. LX was spun out from the parent company in the spring of 2021. And the uncle of the parent company acquired LX and is now in control of LX. So this entire group of companies did not exist when there was a magnet chip process last time. And he was not in charge of these companies. I was also curious to that question. So it makes perfect sense why LX was not involved last time and why they'd be involved this time. But more fucking importantly, they've told us they're interested in the company. There's been multiple quotes by LX media representatives saying that they, oh gosh, hold on one second. Sorry, Mike. Hi, Mustafa. I think somebody's trying to cash a check from me right now. I'm sorry. My phone was on mute. Yeah. Good. I'm actually on a conference call. Can I just do this real quick?
Yeah. So we can do this real quick. The guy that was cashing the check actually just walked out. It looked like he was trying to give you a call too to let you know he was trying to cash.
Yeah, it's all good. $3,800 for Julio. Yep.
Okay.
Yep. Bye.
Okay.
Yep. Thanks. Bye. All right, guys, hold on one second. That's hilarious. I had my gardener is replacing my fence, and I wrote him a check, and the bank just called to cash the check. Could this possibly be the most unprofessional YouTube that ever existed in the face of the planet? Anyway, we know that the company is interested in buying magnet chip. It's extremely rare for a company to put out a confirmation quote saying they're looking at acquiring magnet chip. Magnet chip is not publicly in a process. So it's not like LX has to, by law, they're like a European company or something, saying they're interested in acquiring somebody. And that's part of the legal process of doing this. They didn't have to do this. So LX bid is very real. It doesn't mean it's going to get done. And it makes perfect sense why they weren't involved last time. And they wouldn't have won it last time at $25, by the way. Obviously, there were multiple bidders above 25. So we'll see what happens. I would think much greater than not chance that this company gets sold in the next 3 months. I would put it at 75%, 70%. I'd probably be 90% if it wasn't for the overall macro market. Why bid $25 when there's a $32 bid? I guess you misunderstood, Jake. There's no $32 bid. What I was saying was that the old 29 bid from Wise Road today is worth $33, $34 based on doing the math of time value of money, breakup fee, and the buyback they did. There's currently no bid of $32 for Magnachip. A Chinese consortium bid $35 in June of last year, and they couldn't buy them either because China can't buy them. So there's no $32 bid. All right, are we done? I cannot believe I've been on this fucking thing for an hour and a half. I love you all very much, except Punta and David T. Of course, Punta, you're friends with David T. Makes perfect sense. You guys are both putzes. Kevin Doby, I think Jake was saying $25 in the previous process wouldn't have worked, but then you explained that there was no X at the time. Yeah, exactly. Yeah. Punta, is there a bear thesis? Is there a bear basis in Magnachip? Are you fucking kidding me? Of course, the display business is going to zero. It would be that they're lying, and it doesn't matter if supply comes on board because there's no demand, and that business is impaired permanently. And you're left with a business doing $1 earnings, trading at $18 with $7 in cash. There's your bear thesis. And that it's, a Korean semiconductor trading in the New York Stock Exchange. And we're going into a massive recession. All right. Goodbye, everybody. I will do another one of these the next time we have big news, one of my stocks. I actually want to do it about 2 new ideas, but I won't reveal those until next week. So 2 new ideas coming next week, and bye.